Dear friends, welcome to weekly view on markets. During this week also markets have continued the rally and they have gained. Only on Friday there was some profit booking. So I maintain my bullish view for the coming week as well. So few days of dips in the market should not be taken as a weakness. All the technical and fundamental parameters remain intact. So if there is any dip for few days in the market, it should be used for investing and buying good quality stocks and in investing in mutual funds. Let us look at the index levels during this week. Nifty closed with a gain of 0.74%. It was up by 142 points, closed at 19,332. It is almost like a all-time high for the week. Bank Nifty closed at 44,925. It was up by 177 points and gained 0.40%. Mid cap index also closed at record high of 36,076, gained 322 points for the week, posted a gain of 0.90%. Small cap index outperformed the market. It gained almost 281 points and posted a gain of 2.60% for the week, closed at 11,118. So I had told last week that 11,150 will be a crucial level for Nifty small cap index. So there is some resistance at this level as we have seen on Friday. Markets may consolidate for a few more days at these levels and then resume its uptrend. The overall bullishness in the market and the uptrend remains intact. Let us look at various sectors. Most of the sectors have ended in the green except private banks and some of the digital stocks. They marginally lost. Otherwise, PSU banks were leading, posted a gain of more than 8%. Media stocks also gained more than 8%. Oil and gas sector stocks gained more than 4%. As we have been seeing over past few months, the crude prices are stabilizing at around 75, 76 levels. So that has given good impact on the oil and gas stocks. Energy sector stocks also gained 2.57%. Auto sector stocks gained about 2.32%. Realty and PSE stocks, that is public sector enterprises. So these in this season, we have seen a lot of buying coming back into the public sector undertaking companies. So PSE stocks also gained about 2.16%. Now let us look at technical charts. So how is the market looking technically? This is a daily chart of Nifty. As we can see, market has been making higher tops and higher bottoms. That means it is in a uptrend. And at around 19,400 levels, we have seen some kind of consolidation and profitable booking coming. Markets may consolidate for few more days. That is what the chart is indicating. And after that, market is set to go to the higher levels. The intermediate uptrend remains intact on Nifty chart. We see the chart of Nifty mid cap index. We see similar kind of formation here also. Nifty mid cap index in a strong intermediate uptrend, and few days of uh, dips or profit booking or small corrections should not be taken as a weakness in the market. So, Nifty mid cap index is also set to go to the higher levels in coming weeks. This is a chart of Nifty small cap index. Small cap index is facing resistance at around 11,400 levels. The crucial resistance is at around 11,400 to 11,500. If we look at the long term chart, this is where the previous high was there, and once this level is crossed, so on a long term chart, we'll get a very clear indication of bullish sign on Nifty small cap index also. So among all the sectors, I am very bullish on small cap sector. Still, there is lot of value. There are quite good companies, and valuation is even at this level. I say it is attractive. But only thing we have to select companies with good fundamentals, good management, and good growth prospects. So there is lot of opportunity. So investors should either invest in small cap mutual funds. If they have the expertise to pick good quality stocks, then only they should directly invest into stocks. Otherwise, be invested in small cap sector mutual funds, mid and small cap sector mutual funds, which will give you very good returns. Let us look at Bank Nifty index. After giving a rally, Bank Nifty index is also seeing some kind of consolidation. This consolidation may continue for a few more days, but I am still bullish on banks and financial stocks. The earnings of first quarter is going to come, and I'm confident that the banking sector will again post very good results, very good profits. So on the basis of that, banking, that is Bank Nifty index, is headed to touch 48 to 50,000 levels in coming weeks. Now let us look at some of the fundamental factors of the economy and the market. The macroeconomic indicators of Indian economy continues to remain very good. The auto sales for the month of June have grown by around 12% as per the FADA data which has come last week. So there is a growth of 12%. Generally, it is said that when the auto sector grows, the whole economy grows. This is seen in many other economies in the world. So, auto sector gives a leading indication of growth in the economy. So, when the auto sales goes up, it indicates that economy is set to grow. PMI manufacturing index for the month of June has come at 57.8. This is quite a good figure, but this is slightly down from the month of May, which was at 58.7. Even then, there is growth in the industrial sector. Last week, I had told that uh, the core sectors have grown by 4.3%. So that is reflected in PMI manufacturing index also. PMI services index is at 58.5 for June month. It was at 61.2 in the month of May. There is a slight decrease in services index, but still it remains uh, in the strong growth zone. RBI reserves is stable at around 595 billions. This is a comfortable position for RBI. And similarly, this stability in RBI is reflected in INR USD rate, which is also stable at 82.74. And all the more, globally, the dollar index is between 102 and 103 for past several weeks. So globally also the foreign exchange rates are remaining quite stable. This is good for the economy. Gold price has slightly come down from 60,000 level to 58,791. That means money is moving from safe asset. Gold is considered as a safe asset. So people are ready to take risks. That means they see that growth in the economy and companies is coming back after COVID. This is what the gold price indicates. Gold price is at 76.96 per dollar per barrel. So stable crude price is very good. This is reflected in the bottom line of the oil companies, and we have seen in last 2 months, due to the stable crude price, the oil companies' stock prices have started going up. FIIs have bought 7,363 crore in the current week. They continue to buy every week, and DIIs have sold 6,876 crore. See, here we see a opposite kind of thing. Why DIIs are selling? There are two reasons. One is that the HDFC and HDFC merger is happening, and most of the mutual funds are fully invested into these two premier companies. Now, because of the merger, they have to meet some SEBI guidelines and they have to rebalance their portfolios. They can't have too much of exposure to one company as per SEBI norms. So that is one reason they may be reducing exposure to these two companies, so that when the merged entity comes in, they are meeting the SEBI requirement. That is why mutual fund DIIs may be selling. That is one reason. And second reason is that last 1.5 years there was correction. Generally, retail investors they get attracted by the high returns and they come and invest in mutual funds, looking at past 1 year, 2 year return when the market is at a high level. And after that, when there is market is run up for 1.5, 2 years continuously, there will be a correction of 1 year, 1.5 year in the market. And when such correction happens, the same mutual fund investors who were attracted by high returns now get lose their confidence. They get worried and they are waiting. They know there is a aversion to booking losses. They are impatiently waiting when the market comes to a higher level and they are able to take out their capital from the market. So this time again, this phenomena is happening. The markets have come back, and these people were a worried lot. They wanted very high returns, but that has not happened. They want to take out their capital. So when this market picks up after correction, lot of mutual fund redemptions will be there from these nervous investors. So again and again I keep telling people, please be remain invested for a longer period of time. You will get good returns. But that kind of awareness is very low in Indian retail investors. They think that market will give high returns just like FD. No, that is not going to happen. Yes, market will give high returns, but you have to remain invested in the market for a longer period of time. Don't try to time the market or try to speculate in the market. You will lose your money. So there is good opportunity for investors to remain invested and make good profits or returns from the market. Next week onwards, we'll see quarterly results for April to June quarters coming out, and markets will react to that. There will be stock specific movements in the market that may create some volatility in the market. On the whole, the markets are set to go higher levels on the back of good macroeconomic fundamentals and also continuous FIIs buying. See, they see opportunity in the Indian market. That is why they are buying. And FIIs come with strong research capabilities, and they have seen many economies across the world, and they find that there is opportunity in Indian markets in the coming years. That is why they are buying. So we should understand these factors, and investors should not worry about the short term volatility, and they should remain invested. Mutual fund investors should also continue their SIPs and remain invested to gain from this long term bull market. I feel that there will be a good bull market for coming several years. And last week I have predicted a target of 28,000 to 30,000 for Nifty. That means Sensex will go near to 1 lakh levels in next 4 to 5 years time. So we should utilize this opportunity and be remain invested and invest regularly. SIP is the best way of investing. So investors should do regular investments and be patient. This is all for this week. If you like my video, please subscribe to the channel. You can share with your friends. You can ask your questions. We'll meet again next week. Thank you.